Welcome to January 2026, the first market update of the year. 2025 saw the lowest annual sales volume in over 2 decades. Absolute insanity. Let's get into it. So here we have the summary for December 2025. 2025 saw the lowest annual sales history in over 2 decades. That is insane. Up here we have the summaries for detached homes, townhomes, and apartments. Active listings 4,600, sales 430. For townhomes, 2,000 listings and 303 sales. So actually more sales relative to the number of listings than detached. And then apartments, 5,249 active listings and almost 800 sales. Average days on market quite high here for detached homes. I'm going to flip back to November here. So days on market went up from December versus November. Everything else is relatively the same except listings. So the number of listings month over month have dropped quite a bit. In December, we were at 4,600, but the month before we're at 5,500, so 1,000 less listings. For townhomes, 2,000, but the month prior, 2,500. And then for apartments, we're at 5,250, and the month before was 6,400. So we see this is a lot of seasonality in the market. Every time we get closer to the end of the year, a lot of homes come off the market and get relisted in January or February once the spring market hits. Not a lot of people want to be showing their home during the holidays, and it's a good time to restart and refresh with a brand new listing, 0 days on market, new listing photos so it appears as a fresh new listing, and hit the ground running in the new year. So once the stats come out for this month, we'll probably see a uptick in listings once again. But now for the big headline, 2025 saw the lowest annual sales total in over 2 decades. So in 2024, there were 26,561 sales, but last year in 2025, there were 23,800 sales. So this is down 10% year over year. Really, this is a demand story. Way fewer people ended up making moves, even though life kept happening, marriages, moving, job changes. The difference now is that buyers are way more cautious, waiting for prices and rates to align. And as we keep reading here, sales were not just down last year. It says last year's sales total was 24.7% below the 10-year annual sales average. That is absolute insanity, almost 25% below the 10-year annual sales average. So the GVR chief economist says this year was one for the history books. Although the sales total was the lowest in over 2 decades, realtors were still busy listing properties. Sellers brought the highest total of listings to the market on record since the mid-1990s, eclipsing the previous record high in 2008 by a little over 1,000 listings. That's also crazy. What a market we're in. Record low sales, record high listings. It definitely does become a demand and supply issue. And when we're this far below average on sales, it doesn't really mean that nobody is buying, but a lot of buyers are taking a pause. And the buyers that are pulling the trigger are the motivated ones, the ones that need to buy or sell. This comes with life changes, like I said, marriage, job change, leaving the country. And oftentimes these buyers will be end users. So even though sales were low, the sellers were active. This is why we saw so much more competition among listings. More supply means more competitions amongst the sellers. And when you combine that with softer demand, again, record high supply, record low demand, it often means price cooling. So taking a deeper look at listings here at the article, we are 8.2% higher listings year over year, and then we are 28.4% above the properties listed in 2023. That is insane. So 24.7% below the 10-year annual sales average, and then 28.4% above the properties listed just 2 years ago. When we do look at the 10-year average for properties listed, we are currently 13.1% above that. But when we look at listings for this season, this is where we actually see the biggest difference. So currently the total number of homes listed on the market, 12,550. This is a 14% increase compared to December of last year, and a 34.8% increase above the 10-year seasonal average. 34.8% for this time of year. That is insane. This is huge leverage for buyers. This means you can go into a home, compare, negotiate, and still walk away and find another deal if you really wanted to. And then for sellers, this means that you're not just competing with the house down the street, you're comparing with an entire market segment. Good news for buyers, amazing news for buyers really, and really bad news for a lot of home sellers. One, the silver lining, if you are planning to sell a home, if you're planning to purchase in the same market, you may lose a bit of money on your sale, but you can try to negotiate the difference and get a bigger discount on your purchase. So as long as you're buying and selling in the same market, you should net out to about the same. Of course, if you're planning to purchase into a more expensive property, 10% savings on a bigger property and a 10% loss on your smaller one will generally net you the difference. All right, let's scroll down a little bit further. Let's look at benchmark price, and then eventually we'll get down here into the sales. We were 25% below the 10-year annual sales average, and then we were 35% above the 10-year seasonal listings average. So right now we're seeing a market with oversupply, very little demand. You'd think that prices would take a nosedive because this is a lot of downward pressure on pricing. But once we look at the article, we are seeing, when we look at benchmark price, we're at a 4.5% decrease over December 2024 and only a 0.8% decrease in benchmark price to November 2025. So actually not a gigantic change, 4.5% decrease year over year. So not a gigantic change, only 4.5% down year over year and only 0.8% down month over month. It says here, with sales down and inventory remaining plentiful, prices eased across all property types since the start of 2025. Sales and prices weren't the only metrics that came down. Borrowing costs fell nearly 1 full percentage point. With lower prices, lower borrowing costs, and plenty of inventory to choose from, homebuyers in 2026 are starting the year with favorable conditions. I believe that to be pretty true. Whether these conditions translate into a market with stronger demand will be the million-dollar question, and we'll be monitoring the story as it closely unfolds. So they are right. We are seeing a market right now with very favorable conditions for buyers. But there are too many factors to really decide whether or not that's going to really shift the market this year. We may see an uptick in demand and sales, but looking at the amount of inventory that is on the market, the amount of demand that is needed to absorb that inventory currently on the market and then shift the market into a different direction is quite a lot. This type of market really favors entry-level condos, first-time home buyers, because a lot of investors are not very active in this market. Rental rates are down, vacancy is up, building cost is up. There's a lot of uncertainty in the market. It's more expensive now than it was a couple of years ago to borrow money. A handful of reasons why investors are very hesitant right now, leaving the door wide open for first-time home buyers, entry-level properties in various different property types. This sounds really good for these types of buyers, but likely will not be the big push that we need to see a big change in the market in the next couple months. I do believe this downward trajectory in price will continue into 2026. We never saw prices totally collapse. It's just been a grind month over month, and it's looking like things are going to stay relatively the same for the foreseeable future. What I mean by that is the next couple months, let's call it 4 to 6 months. A lot of things can change that. I mean, consumer sentiment was a little bit higher towards the end of 2025. If that trajectory continues into 2026, it could cause things to change. Interest rates, so the Bank of Canada held their rates, and it looks like they're planning to hold their rates for the next 4 to 6 months. But even a slight change in interest rates could change the market completely. And everything is relative, right? Interest rates dropped a full percentage point since the start of 2025. And for a lot of consumers in the market, that is a big enough change to actually take action. All right, let's jump into sales in December 2025. So in 2024 of December, now let's jump into sales. So in December 2024, there were 1,765 sales. And then December 2025, there were 1,537 sales. This is a 12.9% decrease year over year. And then sales were right here down 20.7% below the 10-year seasonal average. Now moving in here to sales to active ratios, it gives a lot of context to the sales and inventory numbers. The sales to active ratio is a really good temperature check for the market. If you're looking at, figuring out how the market's performing at a glance, 20 seconds, look at your sales to active ratios. If you can get specifically into the sub areas and see the sales to active ratios there, see how fast listings are coming on the market and moving off it, really great way to look. So historically below 12% tends to put downward pressure on prices. We call that a buyer's market. And then above 20% tends to put upward pressure on prices, and we call that a seller's market. Anything typically between 12 and 20%, like we can see here attached is 14.6%, apartments 15.1%. These technically would be considered balanced markets. If we look in the detached market as a whole, 9.3% sales to active ratio, this is a buyer's market. And then on average, we're looking at 12.7%. So we're into the balanced market, but we are right at the borderline of a buyer's market. So the detached market is the clearest buying segment market. These ones attached in apartments are balanced, not too hot. So you're seeing a lot of negotiations, but sellers are able to push back. You have a good chance if you list a property that you'll get some interest as long as you're priced correctly. You'll have buyers in through the door. And if it's a very desirable property, you'll most likely get offered. Whereas on the detached side of the market, buyers have a lot of selection. They're not pulling the trigger on a lot of the properties that are listed. They're taking their time to negotiate, look at all the options, make sure they have the right terms. And sellers really need to be more focused on making sure they're presenting their property correctly. And most importantly, pricing properly so they're getting buyers in the door and then hopefully getting offers. Now, looking at the movement in each property segment, this is a good one to pay attention to if you're interested, for example, in purchasing a townhome. Pay attention to what the attached numbers are saying. I'm going to go through every single property segment right now. The sales of detached homes December 2025 reached 431. This is a 12.8% decrease from the detached sales of December 2024. Benchmark price dropped 5.3% since December last year and 1.1% month over month. So benchmark price for detached homes are falling. Sales are also falling. Looking at apartments, we have an 11.2% decrease compared to the number of sales in December 2024. And then benchmark price has dropped by 5.3% since December last year, and then 0.6% decrease month over month. Sales are down, prices are down. And now for the attached market, we have the biggest decrease in sales. So 18.3% decrease in sales year over year. And then benchmark price is down 5% year over year and 0.8% month over month. So if we're looking at change in sales, the attached market, the townhome market almost saw a 20% decrease in sales year over year. And it does make sense. We saw these sales to active ratios. I actually think I might have it open in here. Yeah, here we go. So townhomes are in orange. I'm going to review this one in another video. This is the market report. We get way more granular into the neighborhoods and property types. But if we look here, the sales to active ratios for townhomes used to be up here around 25%. This is December 2024. Technically, that is a seller's market. And as you can see, as we moved into the year, we've dropped quite a bit. So even though we saw a 18.3% decrease in sales compared to December of last year, townhomes were doing really, really well. So a big change like that doesn't mean that right now townhomes are a really good buy. For that, we really need to look at how much inventory there is relative to the number of sales, not how much the sales are dropping. But everything seems to be quite balanced. We're seeing decrease in sales across the board. We're also seeing around a 5% decrease in benchmark price year over year. We'll see how that changes moving into 2026. Right now, buyers, you are laughing. Really good time to get into the market, especially first-time home buyers. I put out a video just for first-time home buyers and why 2026 is going to be your year. So be sure to take a look at that. I'm going to do another video reviewing the more granular market stats for last year and get into some details for what to expect in 2026. And we'll keep it moving from there. I'll see you in the next video. Peace.